delve even deeper into the aspects of education and potential, empowering individuals to transform education into enterprise requires more than knowledge. It demands access to opportunities and the support systems that sustain them. While innovation and entrepreneurship spark growth, their lasting impact depends on an ecosystem that enables people to build strong foundations within their communities. Equitable financial access becomes the bridge that connects potential to progress, ensuring that talent and determination are not limited by circumstance. In times of uncertainty and disruption, such access provides the stability needed for communities to remain resilient and thrive. So with this in mind, the conversation now turns to how inclusive financial systems can nurture opportunity, strengthen financial systems, and also local economies, and create those pathways towards shared and sustainable prosperity. Our final session is an engaging deep dive into Microfinancing 2.0, investing in potential. The experts headlining the final panel discussion of the whole conference is led by our moderator, a widely respected finance academic and a former senior figure in the fund management industry. He previously held the chair of financial technology at Ulster University and was director of the Center for Financial and Regulatory Technology. He is a professor at the Asian Institute of Management. I now give the floor to our moderator, Dr. Daniel Broby.
Excellent. Well, thank you. And I'm been delighted to hear all of this discussion about our resilient future. But to have a resilient future, we need one thing most. SDG 1, no poverty. No one left behind. And that's what we're going to be talking about. Microfinancing. How we can get these micro-entrepreneurs, how we can get those people who are not financially included, how we can get the financially illiterate to join us on this journey of growth. Well, there's an innovation I've been told about in the Philippines. It's not the greatest innovation, I'm sorry to say. 5, 6 loans. For those of you that don't know it, you lend 5,000 pesos and you get 6,000, you have to pay back 6,000 a month later. That works out at 20% interest, 240% a year. In terms of the young micro-entrepreneurs that we've been talking about, that's a usury rate of interest. And yet we have a robust financial system in this country. We've got the ability with financial technology to get financing to these institutions, microfinancing. So in that respect, we're now going to talk about Microfinancing 2.0. And I can see what you're thinking. Hey, hang on, that means there must be a Microfinancing 1.0. What's going on here? Well, yes. Microfinancing began as a solution to these usury rates of interest. Essentially, pool the money together, go to the people who need it, lend it to them with a proper rate of interest, and educate them on how to apply and repay that loan. Very simple. So what's Microfinancing 2.0? Well, it's bringing financial technology to that process. So in that respect, it is addressing these issues of financial inclusion and financial literacy. Financial technology, it's my specialization. Financial technology is the migration of finance to the internet. And the internet is the empowerer here. It allows us to create this future that we're talking about. So, I would like to introduce the panel, and in that respect, we have a very distinguished panel, but also a panel that is expert in this segment, not just talking about it, but doing it. So firstly, we have Mr. Antonio Itchon. Jesus, please join us, who is the President and Vice Chairman of BDO Network Bank, so a community bank with rural roots, and he's been in that position as a director since September 2017. So he has over 35 years experience in banking and finance, and so not only retail banking experience, but microfinance, affordable housing, and indeed financial technology. So these leadership skills that he's bringing will be really valuable to give us insights into microfinancing 2.0. I would also like the second speaker to join us, Christian Paulo Guanzon, who is coming up now. I have a confession to make. I went on my first trike bike ride last weekend. Great fun, and I recommend it to everyone. It shouldn't have taken me so long. But whilst I was on that bike, I was thinking of you. And I was thinking, my gosh, I wouldn't be having this journey if it wasn't for your company. So what am I talking about? He's president of Good Deal, and he focuses on empowering Filipinos to acquire productivity-enhancing appliances, gadgets, motorcycles, and I assume trikes, by giving them financial solutions to do that. So again, this is a fintech expertise, and his skill set includes financial inclusion, business development, and digital transformation. He's focused on the medium and medium enterprise sector and has cross-industry fintech collaborations with his company. I would also like Jean Pauline Landicho to join me. Thank you, Jean. And Pauline is a very valuable addition to the panel, and actually very timely. So we've just had 2 typhoons hit us, and she tells me that there's been a surge in interest in applications for, obviously, people to recover from the damage that those typhoons have done. So why is she in a position to do that? That's because she represents CARD MRI, which has been mentioned a few times in different sessions, which is one of the Philippines' largest and most successful microfinance networks, and is dedicated to empowering Filipino women and their families through accessible financial services and holistic development. That company, CARD MRI, was founded in 1986 and has grown into a conglomerate of other institutions which is focused on microfinance and SME financing, microinsurance, Islamic banking, and community development. And in fact was honored by the Ramon Magsaysay Award in 2020 for the efforts it was doing for women. What I'll do is I will go through the panel in the same order I introduced them and give them 5 minutes each to talk about their interpretation through their work, because obviously everyone has a different definition of microfinancing 2.0, so that you can get the insights and understand a bit more about what they do, and then we'll try and have a discussion with the panel to get further insights. So, Antonio, perhaps I could ask you to start.
Thank you. Good afternoon. The bank we run for microfinance is BDO Network Bank. It's a savings bank, a subsidiary of BDO. It started, and borrowing from the previous session, it started with a very clear vision, no? That being the biggest bank in the country, there was still a lot of underserved in the country. So we said that should be our goal. Our goal should be to reach out to the underserved and serve them. So it's that simple. Part of it is microfinance, but really beyond microfinance is really banking. How we can bring banking to the rest of the population. So that's how it started. We purchased the largest rural bank in Mindanao. It was called One Network Bank. It had 100 branches. That was about 8 years ago. We've since repurposed it, and we said the first thing to do if we were to reach out to the underserved, we need to be accessible. It turns out the underserved are not just underserved by banks, they're also underserved by the fintechs and infrastructure. So in order for us to reach out, it needed to be physical. So today we just crossed about 600 branches across the country in communities where there are no commercial banks. And we provide unsecured loans to MSMEs as well as to government employees and OFWs. So that's our version and our contribution to microfinance in the country, serving the underserved where banks have not been able to do that.
Excellent, thank you very much. Ian, next, please.
Thanks. Good afternoon. So I'm Ian. I'm from Good Deal, but we're part of a bigger group in finance that's called Asia Link. And I'm excited about our topic on microfinancing 2.0 because it's about investing in potential. I like that particularly because I have huge interest when it comes to research in opening opportunities for especially SMEs when it comes to financing and exploring the world of fintech and alternative credit scoring to make financing and loans or credit in particular more accessible to them. I believe that at least the very least the 2.0 version is beyond the traditional lending and financing landscape, wherein the traditional way of doing credit evaluations is knowing how much they earn, who are they, and lend to them a certain amount based on these numbers. In 2.0, you will now look at what their growth potential is and how sustainable the business model is and how that can help the entire ecosystem. And improving not just their business, but the other businesses within the community as well. So it's not just rich in terms of growing the community with the help of finance, but it also has that capacity to have that domino effect to influence other industries and sectors as well. So excited for our next conversations.
Excellent, thank you. And Pauline?
Yes, I represent the CARD Mutually Reinforcing Institutions. We are a group of 35 social development organizations, that is as of last count. We are continuously growing, developing based on the needs of our communities and our clients. At present, we have more than 9.8 million individuals served, and as to our microinsurance, we have 32 million insured individuals. So we are in the business of poverty eradication. We have our NGO as our microfinance arm. We have our 3 banks, the 2 rural banks and 1 thrift bank, and we have our microinsurance companies which actually fuel the expansion of the whole organization. And by the way, may I just correct that we are 2008 Ramon Magsaysay Awards awardee, not 2022.
And many congratulations on that. So, a personal story from me, when I was a young kid, I went to my grandmother and I said, could I have a loan? And she looked at me sternly and she said, you never lend money to someone that needs it. So I'm going to be a devil's advocate here and say, is this a demographic that we want to lend to? I say that, as I said, as a devil's advocate, but maybe I'll start with Pauline, because an interesting fact is that women are more likely to repay loans than men as a demographic.
In the longest discussion that we have in the 38 years of existence of CARD MRI, we really have proven that women are really driving the household in terms of the finances. Our entry point in the household is actually the women. We even call our members as nanays or mothers. because we know that when we give the penny to the women in the family, they can really translate it to income generating activities. I'm really sorry, men.
Excellent. And Antonio, obviously working within the BDO group, which is very focused
No,
on...
I'd like to disabuse that myth.
Okay,
no?
go ahead. Well, no, please don't. You're not supposed
No,
to
no. You know, we actually lend to a lot of women, but the men we also lend to. About maybe 25% are men. And they're either married or they live with their mothers. So we do lend to men.
Yeah, we also have that in our demographics. They either the married couple or they live with their mothers.
Excellent. But Antonio, there must be frictions in a bank where your community lending is, to some extent, different from the typical lending in the BDO bank.
No, thank you. In fact, that's the reason why we've been kept a separate bank. No? All the other banks that have been acquired by BDO have been integrated into the Unibank. This one was born out of a very specific vision, and that vision they knew required a different skill set, a different way of delivering product, a different way of serving the market. So we've been kept separate, and rightly so. We have been in places where there are no commercial banks. Case in point, last May we opened in Basco, Batanes, and beyond just banking, our landlord is the Archbishop of the diocese. No? And when I first met him, he said, BDO, you were sent to me by God. So it turned out, he was explaining that the Batanes diocese is the poorest in the country. And they run a school. And for the longest time, they couldn't figure out how to pay the salaries of the teachers. And here we go, wanting to rent part of their canteen to turn into a bank branch. No? So they said, this is the answer to our prayers. And in fact, we became the subject of his homily for maybe a week's worth of masses.
And that's a really nice link to what was said earlier about education and the need for teachers to be better paid and obviously feel that they're a major part of the community, which they are. So, Ain, I gave my trike driver a nice big tip, so he's going to repay you early. Is your demographic a good demographic to lend to?
But I'd just like to go back to the women discussion earlier, because it's not just anecdotal. I did a study in 2021 about number one, who called the shots, number two, who is a good payer. So we realized that women call the shots. So even if it's like a motorcycle financing product, even if it's an OFW loan product, and it is the husband who's working abroad, they would still consult their wives to whether they need to proceed with this financing application. Also, with the repayment itself, 70% of the women, even during the height of the pandemic, were able to pay their loans despite difficulties. And when we asked them, there was a focus group discussion to support that research finding, a lot of them said that because they want to have access to credit again. So they were looking at sustainability and being able to access loan again in the future. We've never seen that response in the FGD with men. So women was thinking more long-term, at the very least during that time when we asked them about it. So, yep, when it comes to the demographic, I think that is a major consideration. Make sure we're gender balanced, not to say that we just want to focus on the women as well. But in particular, at least for a good deal side or the Asia Link group, in general, we're looking at those who not just have businesses now as well. You want to give opportunity to those who have entrepreneurial potential. I don't know how you want to call it. I'd like to build on what Mark said earlier. About involuntary entrepreneurs. There's a lot of them, especially in the Philippines. When you see that potential of them becoming an entrepreneur in the future, becoming one of the micro or small businesses, you would definitely want to lend to them. Because in our experience, at least from one of the companies within our financing group, if they know how their financials work, they can measure their interest rates versus their profit margin potential, they can balance it and expand their businesses. I mean, it's not advisable to a very new one or a baby business, right? But when you're in that growth stage and you're ready to expand, you know the business like the back of your hand, you definitely have that opportunity to get access to other people's money. That's what we call credit, by the way, to expand your business. So I think it's the right time. It's a mixture of your preparedness, your readiness to expand, and your ability to get access to other people's money.
Okay, I mentioned these 5-6 lenders, and in fact I mentioned it to my students on the financial technology course, and I was rebuked. I was told I shouldn't call that a Filipino innovation, and so I said, well, tell me a Filipino innovation, and somebody put their hand up and they said, well, that's obvious, it's banana ketchup. The point is, however, that 5-6 is not a good way to finance things. So what do we do about these lenders? Anyone can...
Well, just a thought about it. They're not bad actors in a way as well. I think the huge opportunity with 5-6, they've helped a lot of businesses, by the way. So I want to just put that out there as well. The huge opportunity is with the information asymmetry. What's not available to them and to the borrowers. A lot of times, what you'd call the usurious interest rates would be because they're absorbing a lot of these risks. Like you'd see a lot of the 5-6 giving away either money or appliance or gadgets wherever they go, not even asking any question to these store owners or to these residents, just giving the money or the units right away without asking credit questions, for instance. Again, that's information asymmetry that should they have known more about the applicants or the borrowers, they could have given lower interest rate or applied lower interest rates. So that's at least my recent research is just what I'm focusing on is decreasing that gap or that information asymmetry or shortening that or providing more information as to what can be seen by lenders and financing companies to be able to know more about the borrowers and then lend to them with lower interest rates, right? Let me give you an example. Most of the micro and small businesses in the agriculture sector are struggling to access credit because some of them don't have, let's say, post-dated checks, don't even have IDs. So they're relying on a lot of middlemen, a lot of cooperatives that will lend to them with higher interest rates. So when I studied this, it was so difficult for them. And they would only be able to avail of credit or access credit with predominantly high interest rates versus when they go direct to a bank or to a non-bank financing company. And so I said, this is ongoing, by the way. And so I said, they don't have these. They don't have bank statements. What about we replace this with their proof of purchase from a supplier, perhaps? Because sometimes their money don't even go to the bank anymore. It goes straight to their suppliers, paying for raw materials. Sometimes that goes out to them sooner than they expected, keeping it. And I was able to make one financing company say yes to that and test that idea. And it turns out that they're also good payers, especially if the interest rates are lower. So we're helping them. We're helping the agriculture sector, and we're helping them helping themselves as well. So that's just an example of when it comes to information asymmetry.
That is actually what Card MRI is trying to push in the communities. Our microfinance organizations, our financial institutions are actually not requiring collaterals, post-dated checks, all of those things that are actually required from a traditional bank. Our microfinance institutions just really need to know where are you exactly living. I just want you to sign this document. It's one page back to back. It contains the information, your information from your business, it's information for your family, and a signature of your spouse. Because it's very important that when one person gets a loan from us, the spouse has to have a consent, at least a consent. So there will be no fights at the house. No? Another thing is we educate our members before they take the loan. We disclose our interest rates for them to take or not to take the loan. And then we have weekly sessions. We call it the Credit with Education sessions. These, we teach them the basic financial literacy, the importance of savings, the importance of microinsurance, and all sorts of business topics, health topics, and education. So this is what the core of the microfinance organization is. We really have to push for financial inclusion in the community.
Yeah, I need to echo Christian's first comment. He gave a very Christian view of the 5-6. My own finding, our own finding, is that maybe 90% of our communities today would not be around if not for these 5-6. No? And the 5-6 lenders, they exist because of the failure of government and the failure of the banks to be able to serve the needs of the customers. Having said that, they're also our peg. They set our standard. No? So for the 5-6, their turnaround time for an unsecured loan is a few hours, right? And as simple as an SMS text. That's aspirational for us. The banks will typically take weeks and will require collateral. No? So we try to move towards that position, try to turn around a loan approval unsecured within 2 days. And rather than make it daily and usurious, we actually make repayment monthly so that the money can work for them rather than them working for the lender. No? And the other thing that we copied from the 5-6, which I think they do excellently well, is how they collect. No? I think they collect very well. Daily, they have these runners going around the wet markets and collecting. So we have something similar. We actually have tellers going around with a belt bag and a POS. And they go around the markets accepting deposits and withdrawals through the debit card. So the 5-6, they get a bum rap, but really they've been responsible for a lot of microfinancing. Our job is to make sure that we displace them and we provide a much better service to the communities. No?
So excellent insights. And so obviously my background is as a finance professor, so you're going to get an equation here. Loan book times the margin minus bad and doubtful debts. That's the business model. You've all mentioned financial technology. What does financial technology bring to the table in terms of credit evaluation in the microfinancing sector?
Well, there's a lot. I think that's the driving force for enhanced credit information. Like in our group now, we use artificial intelligence to, number one, speak to the customer. We also use artificial intelligence to identify whether he's a real person or not. There's technology involved in that. Plus, there are what we call credit checks that can also be done in one click. So that technology would already be able to check several databases and see how exposed you are to other credit instruments. And while people think that the exposure is going to work against them, that's not entirely true. We get more information about these credit exposure or credit experiences that someone has had in the past, and we use that information. That's very powerful, by the way, because we would know what your payment behavior is, your credit behavior is, and if you don't have any, you're one of the unbanked or the underbanked. It's also going to formulate some sort of an alternative credit score for you. One tool that we use is the telco scoring or telecommunication score, which in 2022 I did this study about, and I've seen 85% accuracy in telco scoring in line with how we do traditional credit scoring. So telco score uses your mobile phone behavior. So how often do you call someone? Do you send messages, SMS? How is it a prepaid or a postpaid account, and how much airtime do you use on a monthly basis? There's a lot of data points that's used in telco score, but it's able to give us scoring whether it's high risk, low risk, or medium risk, depending on their behavior as how it's correlated to their other payment behavior using their mobile device. So that has proven to be in a way correlated to their payment behavior, and so far we're Some of our companies are using it. It can be an alternative credit score. It can be supplemental as well for other lending companies. So that's how important technology is.
On financial technology, any other observations?
Yeah, we're also using financial technology in addressing the turnaround time for our clients. Like in the experience of card, we can disburse the loan within the day. We just have to see their records from our database. And the microfinance industry actually has the MIDAS, or the microfinance information data sharing. So it's easier for us, microfinance organization, to take on and check online the status of our clients, and also their performance with other MFIs.
No, we certainly use technology for all the use cases that's been mentioned. The other thing that we're really challenged with, and we're using technology and data analytics to help us, is in our site selection. So we're still, we've crossed 600 branches. We are not where we want to be, and we need to figure out where we should be, and that those places are where we are needed. Unfortunately, there isn't documentation, data, or whatever to tell us where to go. So we do need technology and data analytics to help us there, and so far it's been quite helpful.
Okay, so returning to resilience, and I'm going to talk about short-term resilience, or maybe even medium-term. The last year-on-year GDP figures declined from over 6% to just over 4%, and the economy is starting to slow along with other economies in the rest of the world. Fortunately, everyone, I should emphasize, we're still one of the fastest growing economies in the world. But in mainstream economies like the United Nations, like United States, you're seeing a very dramatic increase in consumer defaults, particularly in auto loans. You're seeing a drawdown on people's credit capacity, their credit limits that they've been given by their various credit cards. With a deteriorating credit environment, how resilient is the microfinance sector to that sort of slowdown here in the Philippines? I said I'd ask tough questions, sorry about it.
Okay, talking about crisis, we can talk about empirical evidence. No? The last crisis we just came out of was COVID. COVID was actually our period of fastest growth. We actually grew the fastest during those 3 years, and we actually maintained the quality of our portfolio. We're experiencing the same thing as we speak. The rest of the market and the industry is virtually at a halt. Many are reporting lower performance this year versus last year. The communities we're serving, they're not waiting. They're not looking back at Manila and the urban areas. They are growing. They're growing very fast, and we're growing with them. So, it's another reason why it makes a lot of sense to be serving the underserved, because when you are meeting a need that is not served, the growth is almost infinite.
Our group was born at the height of the Asian financial crisis. I must share that. And then a lot of our new subsidiaries within the group were established just right after COVID pandemic. That tells us about how not just the resilience of the Filipinos. I mean, that I think is a given, or overused even. But it's all about opportunities. And you probably are right about some slowdowns in some areas, but at the very least, gauging based on recent numbers, I still see household consumption increasing month on month among Filipinos. And financing and lending is somehow correlated to consumption. A huge chunk of it is correlated to consumption. So I think when I see Filipinos still buying a lot of these gadgets, appliances, motorcycle, for example, there's still that appetite for financing, and that makes also microfinancing companies very, very resilient. But I think I'd like to emphasize on banking on our resilience to do more. So it's more of a call to action among other financing and lending companies to, if we know we want to lend to more, we just have to find a way on how we can do that. And I'll be back to the fintech area, but we can still maximize that area to be able to identify who else can we lend to, who are the other profiles, because with the way, at the very least, the Banco Central or the government manages this now, the rates, they're going to drive it lower, so it's going to decrease potentially across, and with the continued consumption, it's going to be maintained. So with sustained interest rates, the financing and lending activities are going to increase again very soon, perhaps. But so we're back to that. The resilience is just on the side. We're always going to be there, and we need, essentially we're needed for economic activity. I forgot if I mentioned this to you. I shared this with you. During the pandemic, our group was one of the first to resume financing activity, even before the banks, I believe. It's because we know that they need the money to restart their businesses. And I know we have some collateral loan products wherein, you repossess when they can pay. We pause that just for them to be able to use these cars to run their businesses again and earn money, and then we will talk again once they're earning. But that first step was very critical to empower them to restart.
Yeah, and I think that it's an important point for everyone to understand how resilient the Philippines was during the pandemic. It was, as you said, even your own company was born out of that. Yes, Pauline.
Yeah, in the experience of Card MRI, because we have 3 banks and an NGO, we have this tier of clients. So our Card NGO is focused on serving the underserved or the unserved communities, while the banks will focus on the SMEs and the microfinance borrowers. So this is the beauty of the reinforcing institutions of Card MRI. We are able to cover most of the hardest to reach communities because of the functions of the different organizations.
I began my comments by giving a definition of financial technology as the migration of finance to the internet. And here we have the challenge that 30% of the country has poor or no internet, and those are actually the poorest and most disadvantaged regions. What sort of solutions have you addressed in that respect in your various companies?
Well, so the basic infrastructure we're talking about, internet, definitely the coverage is very poor. In fact, as we speak, coming out of the typhoon, we have about 120 branches now running on Starlink, and because the telcos are down, no? So it is an issue. Having said that, I think technology is catching up, and it is solving that problem. And I think the challenge for us is, while the infrastructure is catching up, we have a lot of work to do in terms of being inclusive, so that by the time the infrastructure is ready to support, our communities will easily adopt digital solutions. No?
We are also using our mobile application developed for our members. It's called Connect to Card. This is our way of reaching our clients. Virtually online, no need to come to our office physically. We are developing this since, I guess, 2018. And then COVID-19 came into the picture. And as I remember, Dr. Alip woke up and said, there's COVID-19, there's no turning back. We have to push all the technological developments that we have. We also have an IT company working for our digital innovations.
But I don't think we have a solution to that yet. You're talking about let's say, the poor communities in rural areas or the far-flung areas. Those are the people we want to target, but at the same time, you're right about the infrastructure lacking. It's not even, I don't think we even have to start with the technology. For example, if you're talking about the internet connection, you might want to ask if they actually have smartphones first for them to be able to install like applications and give them access to credit or access to apps that will allow them to get access to credit. In a lot of areas, we're not even close to that just yet. You may think of giving them the instruments or the tools, like giving them phones, but at the end of the day, they might just sell it away in exchange for food. There's so much on the fundamentals that we have to address first, even before that. So I think at the very least, what's manageable or addressable for the existing financing and microfinancing companies would be those that already have access to the internet to begin with. That's perhaps why their solutions are aligned with it. So it's us in our group. And then for the rest, there's still a lot of things to do. There's still a long way to go. But I heard the word phygital a while ago from the previous panel. That is, I think, what are the first steps to get there. The way we do that in our group is we have what we call loan consultants or loan partners to be able to reach like mountainous areas in like Cebu. I know I've seen that. To reach the community there and introduce our products and services to those who do not have 24/7 electricity or power and internet connection. But that's not even close to where we want to be, but at least I think that's a good start.
You mentioned the frightening concept of selling your phone to raise money for food, but the way that you lend, you could actually lend against those phones, is that right? You were talking about selling the phones to pay for food, but actually part of you could take, with your business model, those phones as collateral for a loan, thereby saving them from doing that.
Well, the products vary, maybe unsecured or secured. So there are some, for instance, for doctors, for OFWs, they're unsecured, so you don't need to identify any collateral anyway. But for some, if you have, for instance, a business and you want to expand this, and I'm saying this because that may be a good option too. If you have a small business, you have a truck, let's say, and you need access to financing the amount is substantial for you to expand a business, open an additional branch, and get it in an interest that's competitive with the banks in the fastest way possible, one-day approval. You can do it through secured loans, meaning there's collateral. And if it's a car, we call it Sangla o RCR, by the way, a vehicle mortgage loan, we won't even get the car. It's just the registration. The registration of the car is what you will have to submit. So you still get to use the car for your business and get a substantial amount of money to expand your business. So you're not going to lose anything, but at the same time, the risks are managed. And so therefore, the interest rates are also a lot better and the process is a lot speedier because you're going to get that within the day.
Yeah, no, I think that's a fantastic innovation and well done on identifying that. We have a question from Peter Pinmar in the audience, which is directed to both BDO and MRI. How do you differentiate the financial services you offer to the underserved, and how do you see yourselves, please don't fight, as partners or competitors?
Those underserved communities are actually those in the logistically impossible communities, the hardest to reach communities. In fact, we are also in those communities with the conflict areas. And we know for a fact that card MRI should be there. It is our core to be there. So what we do is we do massive education, financial literacy, and then that is the time we offer them the loans based on their personal assessment first. They have to check on, their capacity, if they can start a business or if they can run a business. They themselves has to present to us. It's not a presentation that they come to our offices. It's a presentation wherein we go to their houses. So it's more of the same financial product, but the care and the approach is different. We have to really take care of them, look for them, because they cannot just easily come to our place. And when we work in this underserved community, we work as partners. It's very risky to work in underserved communities. It is. So, and with the array of products and services of Card MRI, we know that we can do so little if we just do it alone. So we really have to bring along microfinance friends, those like-minded individuals. And an advantage is that we see each other in the microfinance data sharing platform that the microfinance industry has.
No, Peter, thanks for the question. In fact, I can state publicly, we love the card business, and Dr. Aris is somebody we want to be when we grow up. Card is actually a customer. We actually fund Card. BDO is a major creditor of Card, so we love the business. We love Dr. Aris, and it's a great business. We are not competitors. The markets we serve are just so many and so deep. We actually need more to help us start moving the dial. No? If you think there's about half of the country is underserved and unbanked, there's a lot of market to cover. And thanks to Card, who's been at it for so long, they've really worked the market. So when we come in, and we come in at a different segment, no? We lend to the upper end of the micro SME, just below SME. So our loans are from 30,000 up to 2 million pesos. It complements very well with Card. Card, I think, becomes the conscience and the character of the community, and we're thankful to them for doing what they've done and what they continue to do.
Great, delighted to hear it, and I'm glad that you're not going to be fighting over market share when there's so much market there that we need to address. We don't have an online question, but I can see there's a question in the middle of the room if someone's got a microphone.
Good afternoon, I'm Miles from the MIBL and Italian Chamber. This is a follow-through of the ISCA question because for the BDO, we're developing this microfinancing 2.0 strategic partnership. So when we give loan, would it be possible that we put an ecosystem, a framework, wherein you bundle the wellness loan plus the business operation loan? Because if you go to the underground, really, family and micro business, they really have to think of the food on the table while running a business. So the question in this context is, we are developing a microfinancing, a dual-tier lending framework, wellness loans for individual empowerment, and scaling loans for SME growth, designed to serve underserved population while delivering investor-grade returns. Given your respective institutionals' expertise, how would you recommend we structure the end-to-end pipeline architecture from client origination through credit assessment to portfolio management? I've learned this with Prof. Camus. We cannot escape risks. But as part of financial framework, it's about being ready to face the incoming risks. And in the global spectrum, if I am being in a business community, they want me to be an investor grade. Transcending it to the microfinance and understanding the Filipino culture, I run a business, a sari-sari store, but I also have families. That's why when you give them a loan, partly it will be divided. I think, Iska, this is your question. How a family, a business, when I receive a loan for the family, this is for operation. Sometimes it will be chopped to my family needs. So probably in your framework, come up with a product and bundle wellness plus an operation business to the microfinancing and put it in an ecosystem and still in the integrity chain. So there will be a data sharing that we lend these people, this business, so you can lend them as well. So you'll be ready with the risks, and it will be more appealing to the financial sector.
Right. I'll summarize that for everyone. So essentially, she's saying you can't unbundle the individual and the micro company, because at this level, they're one and the same, the sari-sari owner in the sari-sari store. Can we think of a product that can address that? Is that a fair enough assessment? Thank you.
So let me try to answer that, and hopefully it's not a long one. No? In addition to micro SME loans, we do salary loans to government employees, OFWs, and salaried individuals, because they have a clear income stream. We don't want to lend and create problems about repayment to those who can't pay. No? The use of loans, the first is dwelling. Everybody aspires to have their own home. The loans go towards home ownership, medical, education, and then business. I think the education, the business, is to augment the income streams of households. And going back to the earlier discussion in bootstrapping, the best mitigant to risks is that you focus on your cash flows, you grow your capital so that you have your ability to absorb these risks. No? And that's exactly how we've structured our loans. Our loans are term loans. They go out to 3-5 years. They're monthly repayments, so it's very, very light. And the intention is you use the money to make it work for you. We've also developed a micro-insurance policy, which I think is unique in the market. It pays the traditional 300,000 peso accidental death. There's 10,000 burial assistance, and I have a short story for that. And then it has a unique hospitalization allowance. Every day that you're hospitalized, regardless of where you are in the Philippines, it pays you 300 pesos a day. All for an annual premium of 500 pesos. Very affordable. In fact, it's so affordable, people buy 10 policies or whatever just to multiply the effect. No? We also work with many other institutions. BDO Foundation, we rehabilitate the rural health units in the communities that we serve. Many of those rural health units are not operable. When we're done with them, they're fully furnished and very attractive to doctors and nurses. We also provide free medical and dental missions, so health and wellness is very important, aside from financial education. And then we have a little-known foundation we work with. It's called the Felicidad C Foundation, and that foundation is focused on completing the construction of parish churches and funding formation activities of parish priests, because these communities we serve are quite remote, and spiritual wellness is also very important. So to your point, we totally agree. When we're serving the underserved, we don't just look at the underserved financial needs, but really the total developmental needs of the community. There's a lot to do. We're trying to do our share. Our message, I think, to the rest of the private sector is that there's a lot of opportunity. You should join us.
Are you ready for some slides? I'll present my capstone project if you want. No, I don't think I have an answer for that, but one of the things you have to know when it comes to micro, small enterprise loans is that that's already factored in. We know on the get-go, right from the very beginning, that if we lend to you, we don't have control to where you're going to use it. So once the entrepreneur gets the money, yes, it's business loan, but who knows? You could still use a part of it for personal purposes, right? And I think the fintech resolving or addressing the information asymmetry that we discussed about earlier is going to aid on that particular area. But it's going to be a double-edged sword. with all things considered, through more information provided with the help of fintech, the personal factors will also be considered. That's going to be helpful in the way that if we know that you're personally financially healthy, that's going to add up to your score, right? But if you're not, that's also going to drive the score a little bit lower. But even in that sense, it's going to be helpful to these entrepreneurs because at the very least, lenders will not give you an amount that we know is going to be impossible for you to recover from. And that's a huge part of credit dignity and credit rehabilitation aspects as well. We're not just here to lend you, give you money, and not expect you to pay it, because it's going to hit your credit footprint as well, right? So in a way, both sides are still going to be helpful to entrepreneurs. So back to addressing information asymmetry through fintech. Thank you.
Great. We've got another question from the audience here, which is, considering that not everyone is literate in both technology and finance, how do you think that fintech could be more practical and beneficial alternative to the everyday Filipino? So I suppose that's the question about financial literacy. I think the questioner is saying it's all very well, all these great ways of getting to the consumer, but if the consumer doesn't understand them, where are we?
No, I totally agree. Again, these communities are underserved by education as well. No? So we work with BDO Foundation, for example. We develop financial education programs and curriculum. Our first port of call will be the national government agencies, and the first government agency is DepEd. So we need to teach the teachers so that the teachers can teach the students. No? The second biggest agency is the armed forces. These armed forces, the soldiers, our soldiers, behave exactly like OFWs, and we exactly do what we do for OFWs. We actually train, educate the OFWs, and we support the families who at the end of the day will be on the spending end of all these income streams. No? So there's a lot to do. Totally agree with financial education. Again, it's also an area that I think has a lot of room that we can share with you, CARD and BDO. There's a lot that we're doing, but it's not enough to move the dial. So we send the invitation out.
Yes, because out of our 9 million clients, most are actually at 50 and above ages as well. So it was very hard to promote fintech to them, but we really have to educate them because it's the way to go. The communities are really employing financial fintech apps. So they really have to learn that also. So we have a very strong financial literacy and also our education arm reinforcing this service. As of now, I think we have 2.3 million microfinance clients using our Connect Card application.
Well, short answer is yes. Yes or no question. But I think we've seen this in the numbers right after the pandemic, the opening of formal accounts from a little less than 30% to a little over than 50%, covering savings, basic savings or e-wallet accounts for adults in the Philippines. That's already a testament to how fintech can be helpful as an alternative to Filipino when it comes to financial instruments, right? But aside from what they've said about education or financial literacy from the grassroots, I think another effective way to really embed this to our system is to make sure that their customers and suppliers are also supportive of the fintech growth. And I'm saying this because I don't know if you've been to any area in the Philippines where you have a lot of merchants who do not accept cashless payments yet. Some of them are even close to the National Capital Region, to the NCR. And it's weird, right? You can go farther and you see they would accept e-wallet transactions or online payment transactions. But in very selected areas, it's hard to believe that they're still not accepting digital payments. So that is a challenge. But when I further investigated, I noticed that even their suppliers, their customers are not using these digital platforms just yet. So there may be some sort of social or peer pressure there that could perhaps help, what do you call this, improve the penetration or the saturation of fintech. And so later on, they'll be forced to learn about these things as well, with the help of financial literacy programs.
Thanks. I should also mention that Asia Institute of Management is doing its bit for literacy in fintech, because we have a master's in financial technology, which is one of the first in Southeast Asia. It's a very good development for the financial services sector here. However, being humble, the first global blockchain remittances en masse were done by who? Philippine company, GCash, 2017. So we're already leading the way in payments and micro transfers. Do we have another question from the audience?
Hello, sir. Good day. I'm Lester again. I'm coming from FEU. So I have just a question, and it's also based on my personal experience as well. So of course, we know that CARD, MRI, VDO, and as well as Good Deal has done a great work for reaching our poor communities. But as we know, according to the data of Microfinance Council of the Philippines, around 45% of the new clients of the microfinance are those in below the poverty line of the national poverty line. So which means many of the borrower as well without stable income, meaning they may struggle to repay their loans. And personally, in my own experience, my mother, there's a time that my mother forced to borrow from CARD MRI, not to start a business actually, but the reason is to start a business, but it's to repay or to pay my school requirements. So maybe that's the reason why I'm here. I'm also lucky to have her. But given this reality of poverty, what specific measures does CARD MRI, BDO, and Good Deal take to help those borrowers, especially those who loans the reason for business, but in reality, it's for survival or emergency? So how can we build stronger income sources, ensure that they can sustain and repay in the long run?
Excellent, and a big congratulations to your mother, because she is investing in potential, which is what we're talking about here. But would anyone like to address? Yeah.
So thank you for your question, and thank you that I met you today, one of our beneficiaries. At CARD MRI, we ensure that we take care of our clients very well. So what we do is we have different loan windows. We have loans for businesses, and then we have supplemental loans for education, like what you've mentioned, and for consumables, your other needs, like payment for your electric bill and so on. So, and the credit with education that I have been mentioning is among our best practices. This, I think, is one of the driving factors of credit discipline of our members. So we are able to maintain a near perfect repayment rate of always more than 99% in all our, since 1986. So I remember very well this afternoon at the session of Mark. You are a student and a budding entrepreneur. I will need to talk to you because we have a new organization, and this organization is actually targeting clients who are actually students who would like to take up loans to start their businesses. It's known as the Padayon Microfinance Incorporated. We just launched it last year, and we are supporting, as of now, we are supporting, I guess, 5,000 clients, students, taking up loans for their thesis, for their projects, so they can really start their small businesses. I'll see you later.
Excellent. That's fantastic to hear.
First, now we know where you study, your mother has an account with card, we know a lot about you already. Be careful after this event. No, but at least for the AsiaLink group side, there's what we call credit dignity management. That starts with prevention, right? You got to do credit right. In assessing the net disposable income, you want to make sure the customer or the borrower would be able to really pay that amount, and grant them, in fact, just the right amount to make sure that they'd be able to repay. You may want to reconsider renewals when they are able to, when the business is growing better. And then on the end side, there's what we call credit rehabilitation, which involves a lot of, I don't want to say all the details because it might be abused, but there are some considerations that can be done when we assess your account and how much you're paying. I think key to both credit dignity and credit rehabilitation is communications. If the borrower is really open to negotiating with the lender or the financing company, I don't think there's not a problem that we can't solve or we can't address. So that's key. I'd like to share about how again the positive credit footprint can help you or similar Filipinos as well. That if you protect your records, your credit footprint, you're gonna have to be, you will be eligible for more financial instruments in the future. So that's one key aspect why we're helping these borrowers as well. I've one example in mind, one from the agriculture sector who was borrowed from informal lending sector before, so it's with higher interest rates. But then when we know how he performs when it comes to repaying all of these financing, we were able to help him instead and open our minds to other products that can help them grow, especially in the agriculture sector. I almost go to the agri-machinery sector, but I'll pass it on to Antonio for the next response. Thanks.
Great. Okay. Well, we're sort of fast coming to a close. It's been a really engaging panel. I think what we need to do is just have a one-sentence view of the state of microfinancing in the Philippines, and then we'll move on to make way to the keynote speaker. One sentence.
I'll address this to the previous panel. We know you know your business very well, like the back of your hand. You're now eligible for additional financing. So we know you'd know that you're ready for financing or additional expansion finance capital. Just let the team know and share more about what your needs are and more about you and your business. You for sure will get access to credit. Thank you.
Card MRI is in the business of poverty eradication, but we cannot do it alone. We need people like you to advocate our Microfinance 2.0 initiatives in the community.
So to all of you who have a good business and you're female or you live with your mother, see us outside, we have a booth.
Excellent, and many thanks to my distinguished panel. And I'm really encouraged because, as you know, I live and breathe fintech. But at the end of the day, what we have is we have people on the ground doing real work, investing in the potential of the future of fintech, the future of the underbanked, the future of financial inclusion. Thank you.
Well, it looks like a lot of real-time collaborative partnerships happened there between the panelists and the mothers of those audience members who've given us some questions. Thank you so much, Dr. Broby, and for contextualizing that discussion around SDG 1, all about eradicating poverty, and in this case, so that nobody is left behind through Microfinance 2.0, as enabled by financial technology. Thank you so much, Dr. Broby and Pauline Landicho, Mr. Jesus Antonio Itchon, and Mr. Paulo Guanzon. We have just witnessed the last of the panel discussions, but we've got one more session to go that will be a fitting conclusion to such an enlightening and memorable two-day forum. Now, you wouldn't want to miss our keynote speaker coming up shortly. So stick around. Welcome to this year's AFES, the Asian Forum on Enterprise for Society.
AFES 25, with your active leadership and engagement, we can seize this historic opportunity and help illuminate a path to a vibrant future. Let us work together to realize a better world. We can create the future we want. Thank you for your leadership and attention.
We would like to announce the winners in today's raffle draw. Congratulations and thank you for participating in the survey. You may claim your prizes after the event at the registration area. Thank you. Likewise, in keeping with our sustainability initiatives, if you have no use for your IDs, you may surrender these at our registration booth after the event. But of course, you are very welcome to keep your AFES IDs as souvenirs. Thank you very much.